Hi, my name is Swen. I'm one of the staff members of Mike Ealy, and today I'm going to show you the um, value add quick deal analyzer. And basically, what it is it allows you to calculate very quickly in 5 minutes or less whether a apartment lead you're looking at is worth looking into. We don't base our purchase decision based on this alone. However, if this says no, you know, then the deal is not worth looking into, and we move on to the next apartment lead. Okay. In order to use this value add quick deal analyzer, you need about 5 or 6 things, and this is idiot friendly, so don't worry, you won't mess it up. All you have to do is, if it's green, then you can manipulate it. Okay, you can change it. All right. But basically, you need to know the asking price of the seller. That's easy. It's usually in the, let's say, on LoopNet, they usually have that. Sometimes, they don't have that. So it's more of a, highest and best offer kind of thing, like, give us our offer. So if that's the case, you just put a number there, that might be reasonable or whatever. Or you can ask the broker, like, what's the deal, like, how much will the seller accept, or what's the starting price or whatever. But whatever you do, you need to put it there. And then obviously the number of units and the average rent per month per unit. And if you don't know that, it's a simple math, right? So if you know the gross income when the building is 100% occupied, then you'll be able to find out by dividing it with the number of units, what the average rent per unit is. And then you need to know the age of the building, because the age of the building will influence what the estimated expense ratio will be. So for example, for this particular deal, if the building is, let's say, between 41 to 60 years old, so it's a C building, notice what happens with the expense ratio. It increases, by 5% from 45% to 50%. The location or market, it's optional, this is like a very quick description of what those different markets is. The how do you classify them? But this is the more important number or information, is you need to know the cap rate of the area where the building is at, because based on that, that determines the value today. So for example, for this particular deal, if it's in a C area and it's a C building, then most likely the value today, based on $500 per month per unit, is 1.35 million. Okay. Now, you know, and then you need to know how much rents are under market, for that particular building. Because here's the thing, Mike doesn't buy anything unless he can add value to the building. He doesn't believe in converting, cash into cash flow, or converting cash into yield, especially in the market where we're at right now. Instead, you know, he based his whether or not he will do a deeper analysis into a building, um, based on whether or not there is some value add potential. So meaning, can we increase the rent to increase the income? Can we decrease the expenses, to increase the income, and so on, right? Because if there is none, then we move on, because there's no sense of buying a building, if you cannot increase the value. Okay. Now, um, so for example, for this particular building, even if we can increase the income, by $100 per month per unit, as you can see here, the value at the end of, let's say you're able to increase the rent, that the rent of you're able to increase the rent by $100 per month, right, per unit, but it took you like 2 years to do that. Then you're buying it for 1.5, you put in, let's say, $5,000 per month per unit. Okay, in terms of capex, capital expenditures to improve the apartments, to improve the landscaping and so on. But the building is worth 1.62, you bought it for 1.5, you put in $180,000 worth of renovation, and you basically end up losing money. so the deal is not a good deal to do. However, let's experiment with this and say that we can increase the rent by $200 per month per unit. Yes, there is a $210,000 upside. However, this doesn't pass, Mike Ealy's minimum threshold, and the deal is still not worth looking into. Okay, so you know so this is how you use the quick deal, the value add quick deal analyzer, because this tool will save you a lot of time and effort, so that you only do a deeper dive in deals, that that actually that if this says yes, then the deal is worth looking into. So let's say for this particular deal, let's increase it to $300 per month per unit, so the rents are undervalued by $300 per month per unit, then voila, right? You buy it for 1.5, even though you're overpaying for it. Look at this. You're overpaying for it by $150,000, right? By 10%. And yet, because the rents are under market by $300 per month per unit, then, if you spend $5,000, to increase the rent by $300 a month per unit, you can make almost $500,000 is the upside, and therefore the deal is worth looking into. Okay, so yeah, so then if it's worth looking into, then you ask for the T12, the rent roll, and then you do a deeper analysis. Okay, and then if it's still good with that, then you proceed further, and so on. All right, so hope this is helpful. So if you're watching this on YouTube, go to nasainvest.com/calc in order to download this this tool for free. All we have all we're asking is you put your name and email address, so that we know who are the ones accessing our quick deal analyzer. All right, so hope this is helpful, and we'll talk to you guys soon.